So Tesla shares under pressure today, off about 0.3%, adding to its weekly losses of about 7%. But based on your latest call, it sounds like you'd use the 7% decline as a good buying opportunity?
Because of the software-based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose.
Despite some of the concerns that we're seeing from the street, you reiterated your outperform rating. You kept your price target of 305. Why aren't you buying into some of the worry that we have seen from others, from some of your peers?
All that and more, so let's get to it. If you follow Tesla stock at all, I don't need to tell you that it's doing piss poor right now. Closing down 1% on Friday, for the week down over 11%. But despite what the media would have you think, the sky is not falling. Over the past 30 days, Tesla is up over 8%. And when you look back 3 months, Tesla's chart is looking mighty fine if you ask me. Year to date, up over 140%. Going back a whole calendar year, Tesla is down over 5%, but you all know the growth story. Tesla up over 1,144% in the past 5 years. And like any growth story, it's going to be a bumpy ride for as long as you can stand it.
So Tesla shares under pressure today, off about 0.3%, adding to its weekly losses of about 7%. But based on your latest call, it sounds like you'd use the 7% decline as a good buying opportunity?
Yeah, I think that's right. Just given the meteoric run-up that the stock has had so far this year, it really wasn't a great setup heading into the earnings release. The bar had been set so high, and so, with the earnings release, although they reported a significant bottom line beat, there wasn't a whole lot in terms of new developments. They reiterated their prior 2023 auto volume guidance, and just not a whole lot in terms of new developments. Margins are under pressure. Obviously, that was the focus of the release. So, we view this sell-off this week, though, as a buying opportunity, and really one of the market's strongest long-term earnings growth stories, we think, is how we view Tesla.
You're motherfucking right. My bear case fair value estimate still remains unchanged at $364 per share. Anything under that, I am buying shares of Tesla stock. Not to mention the purchase of long calls will continue to be my play. But don't worry, I'll keep you posted with all my options activity.
They did warn that production would slow down in Q3 due to some factory shutdowns. Are you concerned that Tesla has a demand problem at all at this point?
The demand problem that we really see, it does pertain to EVs, but not necessarily Tesla EVs. If you look at the latest data, and this is from Kelley Blue Book, average transaction prices for new EVs in the US were down 20% year over year in June. And inventories are now at over 100 days supply. Now, the historic average in the auto industry for inventories at dealerships has been around 60 days. So, EVs are actually at 103 days supply at the end of June compared to all vehicles, which are only about 53 days supply. So we are seeing signs of EV market oversaturation, but we're not seeing it as much with Tesla EVs. It's more the other EVs that other automakers are putting out.
How should investors be thinking about EV fundamentals given the economic uncertainty? Even Elon Musk said he has no idea what's going on with this economy right now.
Yeah, we think consumer fundamentals are actually surprisingly strong. And that's really been one of the big stories, the big themes that we've seen in 2023. And when you look at Tesla, specifically their demand is really off the charts for the Cybertruck. You have a reported reservation count north of 1.7 million units. I mean, that's roughly 8 or 9 times the reservation count for the next most in-demand EV model. And so we feel very strong about demand for Tesla's product. Their customers are absolutely fanatic about the product. They're doing a lot behind the scenes in terms of AI and full self-driving development. Each software update improves on the last update. And so they're doing a lot behind the scenes to really drive long-term value. So we continue to like the story long-term.
Do we have a price on the Cybertruck? I know it used to be 40 to 70, but that was pre-inflation. What's the new price for the Cybertruck?
Yeah, good question. They're still working that out. It really depends on the specs of the model that the customer ordered. So that will be worked out. But there's no question that demand is very strong for this vehicle, and it's unlike anything that we're seeing for any other forthcoming EV. And also, Tesla has an expertise in terms of ramping up production of EV models that the other automakers just don't have. You see from Rivian to Lucid to Ford to General Motors, they're all struggling to ramp up production of these new EV models. And we just don't see Tesla having that level of difficulty given their expertise in the space.
Yeah, you motherfucking right. Tesla has gone through extreme growing pains ramping up the Model 3. You saw how that transitioned with the Model Y, considering they share about 70% of their parts. With the Cybertruck, however, this is going to be something brand new. I do believe there will be some hiccups along the way.
And just finally, you talked about gross margins being under pressure, of course. Those price cuts helped spur demand, but came at a cost, right? Do you think that margins get worse before they get better?
It doesn't matter if the margins get worse before they get better. All that really matters is that Tesla puts more butts in seats. Who cares how much the hunk of metal gets you when you're going to get recurring revenue, software as a service?
We think second quarter is pretty close to the inflection point. I can't guarantee that third quarter won't be a little bit worse, but it seems that we're pretty close to a trough in terms of gross margin, and that things will improve from here. At the very least, as the quarters go on, their comps are going to become easier. And so, but they made that choice early in the year to sacrifice margin for volume. And it sure paid off in terms of volume. As you see, their record quarterly sales in the second quarter, 10% above the prior record high in terms of quarterly sales. And so, but margins are certainly on the mind of all analysts still at this point.
Yeah, Tesla shares adding to those early losses right now, off about 0.8% right now, but still up a whopping 112% year to date.
I can't stress this enough. If you keep your eye on the gross automotive margin number, you're gonna miss Tesla's trick, and that's software as a service.
Let's talk Tesla, and when we talk Tesla, we of course talk to Dan Ives, Managing Director, Equity Research at Wedbush Securities. Dan, happy Friday. Good to see you. Thanks for joining us.
Happy Friday to you. Great to be here.
All right, so Dan, Tesla shares took a beating after earnings, basically flat today, but down about 6.5% on the week. Yet you raised your price target after earnings. So what has you so upbeat, and what has investors so downbeat?
Yeah, I mean, Carolyn, we've talked about this before, me and you. This is just what I view as the second inning of a 9-inning game for Tesla. And I think ultimately, now you're starting to see demand stabilize, and I think ramp, especially in China and the U.S. Prices, now look, Musk didn't take off any more price cuts, which why the stock knee-jerk got hit a bit, but they're not going to put their back against the wall. And I ultimately believe 95 to 98% of price cuts are in the rearview mirror. And now you start to get that sum of the parts story, from superchargers to AI/FSD, talk about the OEM that they're in talks with, to battery technology. And I believe this is a stock that continues to go higher despite this knee jerk after what's obviously been a parabolic year.
But Dan, you were already, of course, bullish on Tesla with a $300 price target. You bumped it to $350. What specifically stood out to you from this earnings report or from the earnings call that warrants a $50 price target bump?
Yeah, I think ultimately it's really become the autonomy of electric vehicles in terms of everything that they're doing, because now from a valuation perspective, it's some of the parts. It's not just from a demand, from an auto, from a delivery. I view now you start to add what the battery technology could be, what superchargers could add, and ultimately the drum roll. And I believe this is how you get to $1.5 trillion, $2 trillion market cap. It's FSD AI. So I view stock selling off knee jerk. I view that as sort of table stakes relative to where I see the stock going over the next 6 to 12 months. And I think yet again, over the coming months, the bears will go back into their caves in hibernation mode.
As always, Dan makes excellent points. I just wish he would find another word for ultimately. I guess this is the yeoman in me? I don't know. But someone please pass along to Dan Ives that he is using the word ultimately just a little bit too much. Instead of listening on how Tesla is going to dominate the industry moving forward, all I find myself doing is counting how many times does Dan Ives say the word ultimately. Let's remedy this, shall we?
What is the opportunity in licensing FSD? Because I know you're bullish on that, you just mentioned it, but what's the end game there? What could that look like?
I mean, I think that could ultimately be even bigger than the opportunity that we've already seen in
Oh my God.
the last decade. Because of the software-based opportunity on FSD. And I think if they start to actually license out that technology to other OEMs, similar to what we're seeing on Supercharger, there could be maybe tiers and subscriptions. I think that's the golden goose. I think when you look out into the next 5-10 years, and obviously Kathy talks about this for robo-taxis, I think that's where this story totally changes. And that's why I do view Tesla how I viewed Apple in 2008, 2009. You'd come out of quarters, investors would sell it on iPhones, and our whole view is look at what they're building, look at the services. That's the key to the sum of the parts valuation. And you snap your fingers, and here we are at $3 trillion, where a lot of investors thought $1 trillion was never going to happen.
Yeah, you motherfucking right. If you get past the ultimately machine, you get software as a service. That leads to revenue streams that, quite frankly, many analysts are overlooking. There are millions of Teslas on the roads right now, with millions more to come. Don't tell me you don't hear the opportunity. As for me, it don't take all day to recognize sunshine.
But Dan, you talk about the murky macro picture, I believe is your terminology for it. Elon Musk says the challenges of these uncertain times are not over. Do you think he's going to have to continue to slash prices to spur demand, and at what expense or what cost to margins?
Look, I think around the edges, you can maybe see some rebates, some price cuts, but ultimately, in terms of margins, I think they're flatline. I think flattish to ultimately start to rebound in Q4 into next year. Not going to box himself into a corner, Tesla, especially what we're seeing in China. But I believe the vast majority of that's in the rearview mirror. I think demand looks strong. And you talk about the murky macro. I mean, our view, this is not calling the stock for the next few weeks. Fed, in terms of worries about, talking the tough talk, even though the white flag, in my opinion, is raised in terms of the end of these rate hikes. I look into 2024. I see a bright green light for Tesla, for tech. I think it's the start of a new tech bull market, in our opinion.
And have we seen the lows for gross margins?
I believe we have. I mean, look, it could have maybe 50, 100 bips, but I think more our whole view is it troughs. And I believe we are troughing. And after the stocks had just this massive move, you'll see those knee jerks in terms of the sell-offs. But I think this is a stock ultimately, as we go into U.S. Open, we're going to have a stock somewhere in the threes, in my opinion.
Tesla shares in the red for the week. We're looking at a loss of just over 7%. The stock taking a hit after recent price cuts pressured margins in its most recent quarter, and that overshadowed beats that Tesla posted on both the top and bottom lines. Here with more on what this means for the EV giant and also what we could expect here from other automakers over the next several weeks. I want to bring in Tom Narayan. He's RBC Capital Markets equity analyst. Tom, it's great to see you here. So despite some of the concerns that we're seeing from the street, you reiterated your outperform rating. You kept your price target of 305. Why aren't you buying into some of the worry that we have seen from others, from some of your peers?
Because he's not an idiot.
Well, I think Tesla is kind of a little different than some of the peers, right? So I think, for Tesla, it's really about the future, like way into the future. Their numbers came in great. It's just that they did say that they're going to be cutting some production in the third quarter. A lot of folks wanted them to blow out of the park and raise the guidance on Model 3 and Model Y production for the year. That's probably not happening. So I think some kind of short-sighted people probably took some money off the table there. But really, it's about what Elon said on the call, licensing FSD. That's going to be a game changer. That's the biggest driver, really, for my 305 price target.
Tom, I'm curious, over the course of the last, let's say, 3 or 4 months, what the most common question that you've gotten from clients is on Tesla specifically. Obviously, the stock we know through history has done all kinds of crazy things, up, down, sideways for all kinds of periods of time. But this year, it feels like when you've seen with the free cash flow, you've seen the delivery numbers, the story feels a little bit different maybe than it did in prior runs. I'm just curious what the reaction has been, what those conversations have been like with your clients.
Yeah, the main questions really have to do with the price cutting. Does that mean that there's a demand problem, right? And I think cutting production in Q3, now this is planned cutting just to upgrade the production plants. That's all it is. But I think that does add fuel to the fire where people may think, oh my God, there's a demand problem for Model 3, Model Y. So a lot of folks are wondering, what is the next car in the pipeline? We know it's been speculated, and Elon has talked about this Model 2 car, which is going to be this lower priced car, high volume car we're going to start seeing in 2025. So that's really where everyone wants to see what's the next big car to come out for Tesla, and has demand waned a little for 3 and Y. We think that's not what's happening, but we are excited about this new car that could be coming in 2025.
There is no demand problem for EVs. Scratch that. There is no demand problem for high quality EVs. Tesla's demand is only hampered by 2 things. 1, how fast can they produce these vehicles? Will they hit 2 million this year? I don't know. The only other factor that will prohibit Tesla from selling vehicles is whether or not the consumer can afford that vehicle. Tesla must cut prices to a degree in order to get the cars in consumers' hands. Every vehicle sold is future revenue for Tesla.
And I'm curious what you guys think then of the truck. I enjoyed Elon's color on the call with, what was it, so far off the hook, there's no hook for demand there. Just curious how you think about that forthcoming product.
Yeah, it looks like some pretty strong demand here. If what's indicated in the press on the price point could indicate some trouble for some of the Detroit 3 with their electric trucks, as far as how they're priced, because it looks like Cybertruck is going to be priced potentially in the $40,000 to $50,000 range, and it offers 500 miles of range. So this is all speculated, but if that is the case, this could be a real problem for some of the competitors. I don't know if this is going to be a huge volume maker. I think it's a great market entry for Tesla, and it really showcases the technology that they have. But ultimately, the future of Tesla really rides on the Model 3, Model Y, and then this new Model 2, and what it does, again, with autonomy, FSD, licensing it to other OEMs. That's really where I think investors should focus.
And Tom, one of its competitors, Ford, obviously maybe already starting to feel some of that pressure, lowering the price of its Lightning earlier this week. When it comes to Ford, we'll hear from them next week. Anything that we heard from Tesla signal maybe some of the troubles that we could also see from Ford, or are they uniquely positioned given the fact that they're obviously not as reliant on EVs?
Yeah, I think it's kind of a different story. I mean, certainly, actually Ford has actually set themselves up pretty well for the quarter with very low expectations. So I actually think they could do very well. The problem is everybody already knows this. So I think for them, they'll probably, beat the quarter and raise guidance. But I think that's largely expected. People are really looking, when it comes to all these legacy automakers, on pricing. So even though they may do great this quarter or maybe this year, everyone's looking at 2024. And pricing seems to finally be falling. We're seeing all this price cutting happening. And now I think that's where the focus is. So even though they may do fine on this, next week or when they report results, I think people are going to be looking past that to 2024 and worried about pricing coming down and the impacts that'll have.
No matter what EV you're talking about, they are not competing with other EVs. This EV market share nonsense, it kind of needs to stop. You're talking about less than 10% of new vehicles being electric. So EVs aren't trying to take that 10%. No. They're trying to bleed into that other 90%, steal from the internal combustion engine sales. That's what's happening here. Cybertruck doesn't give 2 shits about the person that's going to buy the Ford Lightning or the Rivian R1T. Their target is those that are going to buy those internal combustion engine trucks. They want to get those individuals. Its goal is to be the best functioning pickup truck on the market. Despite its gaudy appearance that seems to put other people off, it's going to be the best truck you could possibly buy. It's no accident the Model Y is one of the best-selling cars around the globe. That's because it's better than anything in its category. A true market killer. Everything that Tesla touches turns to gold.
Finally, I just want to ask you about GM, another legacy automaker. Looking at the stock right now, it's at 38 bucks. It feels like it's been at 38 bucks my entire life, essentially, save that one run we saw back in the pandemic. Curious what you make of this story, because this is a name, back in the spring you were a bit more constructive on.
Yeah, it's tough because I think that there's some great things going on here as well. You have an EV lineup, which should really boost pricing and absorb some of the pricing we're worried about for some of the other legacy companies. Now you have all these new EVs coming out that are higher priced, the Lyriq, Celestiq, the Blazer EV, the Hummer. So all of this should help, and it's really exciting. The problem, though, is all of these automakers are about to face the buzzsaw of pricing coming down. It's inevitable. Incentives are going up. Used car price data, I'm sure you saw, came down a lot sharply. We're in a disinflationary environment. Volumes are coming back. So in this environment, it's a little tough to be really banging the table. But we do like some aspects of like the EVs coming out. Also, the fact that they do have AI, right? You do have the Cruise, the autonomous robotaxi. Maybe the interest in AI all of a sudden that we've seen lately. Maybe that'll create a halo effect for GM. We'll only see.
Yep. Still a battle for both Ford and GM, especially when you're talking about their EV side of their business. Let's not forget, they're not making any money on any of the EVs that they sell. So to cut prices would mean that their losses would be even greater. But you really won't start to see the sweat beat off their brow until the Cybertruck ramps up to any meaningful volumes. GM, Ford, they depend on their internal combustion engine pickup sales to drive their business forward. Should Tesla be successful in their endeavor and steal market share from those pickup truck buyers, as a US taxpayer, get ready to foot this bill. Be prepared, there might be some bailouts necessary, because once the other shoe drops, the writing will be on the wall. It'll be reminiscent to the dying throes of Blockbuster or Kodak. And it'll be a train wreck that none of us will be able to look away from. That's all I got for you today. Be easy. Peace.